5% last I checked. Yeah, just about 5%. And this is a stock that has fallen 52% in a year where the mid-cap market has surged and soared. And there are lots of reasons for that. In fact, just yesterday, market regulator SEBI issued an interim order in the matter of this issue of preferential share allotment by Brightcom Group. It also barred top executives from holding any board positions in the company. Reema, just give us some context. I mean, this is a controversy, and this is obviously now, SEBI's taken cognizance and come out with some very, very strong sort of measures. So tell us what exactly has happened.
You know, forget the fact that it's down 50% in the last 1 year. If you could pull up a 2-year chart of Brightcom, you would see in December of 2021, the stock price was closer to 200 rupees, right? I think 195 thereabout. So over a 2-year period, that's the extent of wealth decimation. So that's point number one. A 2-year chart of Brightcom. If you could pull that up, you would see the kind of wealth destruction. Okay, let's get back to the second interim order, which was released by SEBI yesterday. Now, this is regarding the preferential issue that the company had done. The company had raised close to about 867 crore via a pref issue. Now, SEBI has found certain irregularities in the pref issue. One, they're saying that the company had financed its own preferential issue via some circuitous movement of fund. Secondly, they're saying that they've submitted forged and fabricated bank account statements to show receipts of share application money from allottees. So, that itself, according to them, is fake. Thirdly, they're saying that once you raise money, you have to declare how you're going to use those proceeds, right? The proceeds of the preferential issue were not utilized as per the declared objects of the preferential issue. And fourth, when they go into the details, the basic evidence seemed to suggest that there could be a possibility of some money being siphoned off, or at least as of now, it's not been accounted for. So these are the irregularity, the lapses that the company has found in the preferential issue, which was done by the company about 2 years back. Self-financing, money moving through circuitous route, forged bank documents, the possibility of siphoning off. Now, SEBI consequently has barred the CMD of the company, Suresh Kumar Reddy, and the CFO of the company, Narayan Raju, from holding board positions in any listed companies. Suresh Reddy, who is the CMD of the company, has also been barred from the securities market till further orders. He's been asked to square off all open positions in the next 3 months. And not just that, they've also passed an order against certain other individuals, which includes Shankar Sharma, and they've been told that you cannot sell any shares in Brightcom until further notice. In response to that, Shankar Sharma has in fact tweeted he had participated in the preferential issue to the tune of about 57 crore rupees. And Shankar Sharma's tweet, if you could get that up, he's saying that we've submitted all the required reconciled data to SEBI today. The delay was because of bank reconciliation data pending from the company, and he's hopeful of an early closure of the matter. So there is some clarification coming through from Shankar Sharma, but right now clearly there are some irregularities flagged off, and it's very rare, to see SEBI come out with a second interim order on a company. Very, very rare.
Oh, absolutely. Reema, thanks for taking us through, all of those details and bringing us that context. I just want to highlight that, we had spoken to the management of Brightcom in February of last year and flagged off several concerns which were related to constant name changing of the company, acquisitions, equity dilutions, high receivables. There were a whole host of issues that we actually discussed. So here's an excerpt of a chat that we had with the management over a year ago.
4 name changes in the last, more than 20 years. You've done a lot of business pivots. It started off as a greetings company. At one point of time, you were into wearables. Now you're into advertising technology. And, despite all these pivots, it's not that the revenues of the company have done phenomenally well. The revenue growth in the last 5 years has only been, sub 5%.
The market wasn't sure how we'll emerge from all these difficult situations that were there.
While you claim that some of your problems have been solved, there are a handful of other problems as well. I take a look at your trade receivables. They are at 1,400 odd crore rupees. That's not all. You have advances that you've given, which are to the tune of over 700 crore rupees. That's 2,100 crore rupees on a balance sheet of just about 4,000 odd crore rupees. What explains that?
See, the nature, like I said, the nature of the business, this is not a problem. This is the working way of the business.
Mr. Reddy, your client roster also includes names like Yahoo, Google, Unilever. These are names that we're seeing in your annual report. And yet, as my colleague pointed out, the receivables and the loans that you've provided appear to be higher for a company which is in the nature of your business. It seems a little unusual and counterintuitive.
No, it's not. It's not. Let me explain that. See, we work with ad agencies like Mindshare, Havas, Mediacom, and if you look at the cycle, payment cycle is usually about 90 days, 60 to 90 days, sometimes up to 120 days.
You've made this acquisition of over $100 million and you haven't named the company that you're giving $100 million for. You've just called it a US-based digital audio company. Shareholders deserve to know why you're spending $100 million over a company that you're not naming.
No, I did not. I mean, let me explain this. We have signed a letter of intent with this company.
Okay.
This is a US-based audio advertising group.
What group is it?
US-based audio advertising group.
What is it called? What's the name of that group?
No, we cannot name it because we have just signed it. There is a non-disclosure agreement we have.
This was a conversation that we had with the CMD of the company, Suresh Kumar Reddy, in February of 2022. So we're talking about 18 months ago. This was prior to the company raising that money via the preferential issue. But even then, there were some concerns about very high receivables on the company's books. Despite having clients like Yahoo on their roster, the company's business model kept changing, kept pivoting. So we tried to quiz the management on that. But since then, of course, the company raised money from marquee investors, including Shankar Sharma. And now SEBI has found certain irregularities. And, as you could see, in February of 2022, the stock price of Brightcom was, I think, 140 plus. And since then itself, the stock has come down to 23, lower circuit today. Get into a break. On the other side,